Yes, welcome to our corporate accounting class. Today we are going to continue the same final accounts of the company, preparation of a P&L account. Actually, this is a essay type question. We have to prepare both statement of P&L and position statement. Both the things we have to prepare. But here, for want of a space, first I am teaching you how to prepare the P&L account. Of course, already you are experienced two three problems we have solved preparation of a P&L account under the new format. This is another one. This is a essay type question. We are given with some set of informations. From that we have to prepare both P&L and balance sheet. Okay, the informations are not given in the form of the trading trail balance. Some set of informations are available. Of course, those informations are very apt for the preparation of P&L account. First, we are given with the purchases, wages, opening stock, and closing stock in the adjustment. See, when we are given with the purchases and opening stock and closing stock, what we have to do is when we are having the closing and opening stocks, we have to ascertain what is the change in stock, and that should be adjusted against the purchases. What does it mean? Simple. Uh, we have to take that cost of purchase, cost of sales we should take. Opening stock plus purchases minus closing stock we have to take. Whereas in the format it is given as changes in stock, that is a closing minus opening, that amount should be deducted from purchases. In that way both the things are same. Here the purchases is 9,25,000, closing stock is 455, opening stock is 375. So closing minus opening, that change in the stock is 80,000, that should be deducted from the purchases. Okay, then another one is, first let us go with the statement information given in the board one by one. Revenue from operation, it is a simple sales in the sense net sales. Then next one is other income. No information is given in the question, so we left that item blank. Then purchases I explained. Then another one point is staff benefit expenses. Under staff benefit expenses, wages, salaries, right? All those things we have to take, and other expenses should be taken one by one. Then finance expenses, nothing is stated here. And depreciation, actually the item is heading is depreciation and amortization. Here we are having the adjustment, though we are given with the 2 3 fixed assets, whereas the depreciation is applicable only for depreciate plant and machinery by 10%. Total amount is 15 lakhs. 10% on plant and machinery is the depreciation amount, that comes to 1,50,000, that is taken in this subschedule depreciation and amortization. And other things, we are having manufacturing expense, salaries already we considered for employee benefit. Then manufacturing expense, bad debt, director fees, debenture interest, and call scenario goes to balance sheet. Either you should deduct it from the share capital or shown in the associate of the balance sheet other assets. Then miscellaneous expenditure, I am sorry. Then plant and machinery goes to asset side, premises asset side, interim dividend paid. That amount of interim dividend should goes to the balance sheet. Okay, that amount of interim dividend, that should also goes to balance sheet. Actually, that the interim dividend is the expenses. Previously, we used to take it in P&L, whereas here what we have to do is the amount of interim dividend should be adjusted against the surplus account. That means surplus account minus interim dividend, we have to take it in the balance sheet. Then furniture and fixtures goes to asset side of the balance sheet, fixed asset. Sundry debtor provision is there given in the question. That amount of provision is also notified here. That amount of provision, that is a bad debt, RBD, is taken under expenses side. Okay. Debtors goes to asset side of the balance sheet. General expenses, that amount should be taken in 84,175. That should have been taken in expenses. There is a separate schedule, right? You can see in the board there is a separate schedule, subschedule. In that general expenses you can take. Stock, opening stock is adjusted against the purchases. Then goodwill taken in asset side of balance sheet. Cash in hand, cash at bank. There is a separate subschedule for the cash items, cash and equivalent in asset side of the balance sheet, not in P&L. Then subscribed fully paid capital. That amount of subscribed fully paid capital, subscribed and fully paid capital, authorized capital, nominal capital. Okay, all those things taken under balance sheet. First schedule, shareholders funds. On that there is a separate item called share capital. There you will have to take. Then surplus account, we prepared only the statement of P&L. That amount of surplus item that should be shown in balance sheet liability side. See, reserves and surplus like that. Here you will have to show the separate item called surplus item. Okay, then 6% debenture, then that should also goes to the balance sheet. Then sundry creditor, this is liability, current liability. Okay, in balance sheet there is an item called current liability. Under that you will have to take. Then bills payable, this is also a current item. Like creditors, you should take it in the balance sheet, current liabilities. Sales, this is the important point. Sales is taken under revenue from operation. Mind it carefully. Previously we showed separate sales, whereas in the new format we have to show only the revenue from operation. See, basically sales is the main source of revenue from operation, right? We have to show it under revenue from operations. General reserve term itself is explanatory, that should goes to the balance sheet. Then adjustments, depreciate plant and machinery, we have considered 10% depreciation, 1,50,000 taken from 15 lakhs plant and machinery. So that amount is taken under what is that, under the heading called depreciation and amortization. Then provide a half year interest on debenture. Actually in the problem itself you are given with the interest on debenture, that comes to 45,000. The debenture is 6% debenture, so per year debenture interest is 90,000. We already accounted 45,000. In the question also it is given as provide debenture half years debenture. So 6% should be calculated. Already 50% we have taken, 45,000. Another 45,000 now we have to provide. It's a provision. So two effect should be given. One in P&L account. Another one should be that amount of 45,000. Second 45,000 added with the debenture in balance sheet. Then another adjustment, make a provision of a bad and doubtful debt. See, this is RBD. That RBD taken in expenses side, 4,250. No need to calculate that amount. It is already given in the question. That amount should be taken here under expenses. Okay. Then stock. That stock of 4,55,000 is taken in the first point. Right. I have showed the working purchases, opening stock and closing stock. In that closing stock 455 we have to consider. That means the simple cost of sale, cost of goods sold, that we have ascertained. Okay. Whereas here the same information is presented in the form of purchases plus movement of stock. Accordingly we have taken 455. Then if you total it properly, then you will get the amount of profit 297,500. Mind it, one important point in this question, we are not given with tax expenses. Okay. If we are given with the tax expenses, then we will get the amount of profit after tax. Here both the items are same. Profit before tax and after tax, both the items are same.